Welcome to today's American Community Media Weekly National News Briefing. I'm Sunita Sarabji, your moderator today and co-producer of our weekly Friday briefings with my colleague Pilar Marrero. Tucked into the 1,000+ pages of President Trump's big, beautiful spending package, which passed the House last month, is a proposal to impose a 3.5% tax on remittances on non-US citizens. In 2024, US residents sent more than $220 billion to families and friends in other countries. More than half of that went to Latin America. Mexico is the largest recipient of US remittances, while India is the top recipient of remittances from around the world. The tax would harm economies abroad, especially in lower income countries where remittances account for 3 to 25% of overall GDP, outweighing both foreign aid and foreign direct investment. Speakers this week will discuss the proposed tax, challenges to implementation, and geopolitics, which countries would face the heaviest burdens, and whether Latino Americans have amassed significant political muscle to gut the proposed tax from Congress's spending bill. We have a distinguished group of speakers lined up today. Helen Dempster, Policy Fellow and Assistant Director for the Migration, Displacement, and Humanitarian Policy Program at the Center for Global Development. Dr. Manuel Orozco, Director of the Migration, Remittances, and Development Program at the Inter-American Dialogue, and Senior Fellow at Harvard University's Center for International Development. Ariel Ruiz Soto, Senior Policy Analyst at the Migration Policy Institute, and Ana Valdez, President and CEO of the Latino Donor Collaborative. So let's begin with Ariel Ruiz Soto, who will provide an interview of remittances. He will also discuss the short and long-term strategies to Trump's tax on remittances, including greater access to immigration data, and how the tax may be counterproductive to Trump's aim of slowing migration. Welcome, Ariel.
Thank you for having me. It's a great pleasure to be with all of you, and I look forward to your questions. I think the introduction did a quite good job to try to present the reason overall of why the remittances are important generally. So let me just dive into a few things, a few points of data that I think are important set in the context. In total, the World Bank estimated
Ariel,
that
I'm so sorry. You've got to slow down just a little bit. Thank you.
In total, in 2024, the World Bank estimated that there were about $905 billion sent in remittances worldwide. The majority, about $685 billion of those, were going to lower or middle income countries. And in those regions, the biggest recipients, as was just announced, were India and Mexico, far ahead of any other country in the world receiving these types of remittances. Philippines, China, and a few other countries are close following. And so what remittances have done now for decades is become an instrument of development within themselves. They usually provide benefits and access to services, especially for daily expenses. We're talking about utility bills, food, and in some cases, hospitals. In some places, remittances also can be able to access other development projects, for example, building homes or schools or hospitals in places where there is no or very few government investment, for example, in the case of the Western Highlands of Guatemala. But more than that, we've seen that over the last several years, overall, remittances levels have actually gone up. And that is an important aspect of it because remittances, even during the pandemic, went up across the world, but differently across regions. Latin America was an exception where remittances actually increased overall, even though there was a significant economic difficulty in the United States, the primary sender of remittances to Latin America. I think this type of example shows us that even when economics in the United States or policies change in the United States, migrants in the US continue to have that commitment to their families, communities, and cities to be able to send this life-changing lifeline for many of the people that depend on them, especially in rural areas and places where migration or emigration can be an important aspect of that. And so that's an important piece of it. Let me just say another moment here that within the countries that I mentioned, there's some diversification of experiences. For example, we've seen already that so far this calendar year, remittances in Mexico appear to be decreasing somewhat compared to previous year. That may mean that in some places, Mexican, especially Mexican immigrants in the United States, may be sending less frequently or less money to Mexico, for example. According to Mexican data, Mexicans in the United States send about $400 per month to their family relatives in Mexico. That's a little lower than, for example, Guatemalans who send almost close to $450 to $500 per month. And in Guatemala, there's been a slight increase in the month of May. We don't have data yet for Mexico for May, but at least in April, remittances to Mexico had been decreasing. Now, we will get into other of my colleagues here. We're getting to the difference and what that would mean across countries. But it's important to think about that even though Mexico is the largest receiving country of remittance, there are other countries that receive a higher share of those remittances, and therefore their GDP vary and depend more, even though they may receive less remittances amounts in total. So what this means for the Trump administration, I think we can have a conversation about how it will be implemented. But clearly, beyond the aspect of the remittances, what the Trump is trying to do with this is twofold. One is try to understand or use this as a method of collecting money to subsidize or to cover the deficit for the bill that they're advancing, to be able to have some of that adjustment. But a second and equally important aspect of this is that by mandating the remittances that there will be a 3.5% remittance tax on non-citizens in the United States, or some non-citizens in the United States, I should say, that means that the United States will also, and through the remittance agencies, be able to collect citizenship or at least legal status information of those immigrants, which could then potentially be able to be requested or provided to the US government. And I think that's a big aspect of the data here that is not being considered as much in the media. I think it's we can talk about implications in the future, but it's important to note too that remittance agencies like Zoom or Remitly or Western Union are going to carry the burden of trying to ask who is an immigrant or what their immigration status of that person will be. We can later talk, and some of my colleagues will address what we could expect to happen. But at least in the short term, at least what we've seen so far from Guatemala and Mexico, is that migrants will likely send more money before the tax is implemented, and then afterwards perhaps decrease somewhat their sending, but maybe not to a significant degree, as was the case during the pandemic. Of course, there's still multiple factors at play here. We'll see if the bill is passed the way it is, if it is signed, how quickly it's implemented. But the role that remittance agencies will play will not only be difficult for them to implement, but administratively, it would also take more money for them to do so. Remittance agencies already charge a remittance fee until a certain amount of sending. For example, some may charge $0 for a fee if you send more than $500, but if you send less than that, there may be a 3% or a $3, depending the amount, a fee associated to that. So that could actually increase their expenses as well for the remittance agencies that now have to also figure out a system to request and verify people's immigration status. So I think those are the biggest aspects of this remittance, this tax potential implementation. I think in the local aspects, it likely will affect it will likely have disparate effects on those rural communities that have or depend more on those remittances, and you have less an effect on urban areas where maybe that's not the case. But the bottom line is that by potential decreases in remittances to these countries that have been a lifeline for decades, some migrants from some places may actually be forced to immigrate for economic reasons instead of stay in their country of origin, which is counterproductive to the broader Trump immigration agenda of trying to reduce irregular migration. Again, remittances, and I'll conclude by this, remittances have been for decades a vehicle of development for these middle and low-income countries, and by reducing that amount or making it more difficult to send that amount, it could actually backfire and produce irregular migration in the future if those remittances are decreased. I'll leave it there and ask for questions.
Such interesting comments. There are a number of questions in the chat, and reporters, please do enter your questions. We'll take them in the order that they appear in the chat. Peter Sherman of ACOM has a question. Peter, please ask your question. I can ask it for Peter. Is there an argument for taxing remittances because they take money out of the local economy in the US?
That could be a possibility, but there's also other bank transfers and other investment that businesses provide and move their money across borders that would likely be subject to the same conversation. And I think the bigger aspect of the countries that are Mexico, for example, and Guatemala are thinking about is that this is money earned by their citizens in the United States, and they should have the ability and freedom to spend it the way they want. Many of the countries, including particularly most vocally, has been Mexico, that have said that Mexican immigrants have already paid taxes in their earnings through their checks and other taxes in income taxes, for example, that actually already contribute and collaborate to the local and state government, so that the fact that they will be taxed again would be illegal or at least inappropriate. And I think that's a bigger argument that we'll likely see going forward. But it's true that money moves across borders in many ways. Remittances are not the only or the main issue. And that could be applied more broadly if that's the case.
Interesting. Anjana Nagarajan Bhutani from India Currents has a question. Anjana, please ask your question.
Hi. So my question is, are you concerned that if the legal methods are restricted, people might turn to illegal methods or unregulated ways to move the money, increasing the risk that it'll be misused?
So thank you for your question. I think my other colleagues will get deeper into the answer of that. I'll just say for now that it is likely that, first of all, this tax would be applicable only to that would not be applicable to U.S. citizens or LPR residents in the United States. And so people could, to bypass this tax, for example, people could try to give their money to a U.S. citizen that they trust, an LPR that they trust, and they could send the money directly. That would be the easiest, perhaps, way to do this. But also, it could be, like you suggest, that migrants will likely either send their money through other methods that are not protected, or carry money directly when they go to a country if they can to visit, which may be putting them at danger or target of violence, if, especially, for example, in Mexico, cartel groups and others know where people are arriving to and could potentially target them when they land there. But I think my other colleagues will likely go do a deeper dive on that question.
And Ariel, I had a couple of questions for you. You mentioned that there was an increase in remittances during the pandemic. How did that happen when workers in the U.S. had obviously less access to income?
So the increase happened, again, I want to be clear, the increase happened for some regions, not all regions. For Latin America, there was actually, in some countries, for example, like in Guatemala, there was a short decrease in remittances for a couple of months, maybe a few weeks. But after that, once migrants began to recalculate their spending, usually in their household, they began to send additionally more money going forward. It could be true that in some cases, some of the state or federal relief programs that they received could actually been supplementing some of the traditional remittances they would send. But the data shows, at least for Latin American countries, that overall, those remittances increased year to year, even during the pandemic. I think, again, each country will, each population of immigrants in the United States reacts or calculates a little differently how they send remittances. For example, the statistic I just mentioned to you, that Guatemalans tend to send larger amounts than Mexicans, even though the Mexicans are more in the United States and therefore send more money to Mexico. I think that's likely going to depend and change going forward. But overall, it's clear to me, at least, that migrants are very well aware that the need is so high in these communities and the communities of origin that they will likely find a way to either send maybe a little less or to send more money during times of economic turbulence to their countries or communities of origin.
Yeah, here are a couple of questions that came in over my text. Should we expect to see a tangible drop in remittances once this tax is imposed, if it is imposed?
I'll be curious to see what my other colleagues have to say. For me, I think it's likely that it's going to produce an increase in remittances before the tax is put into place, so that people may actually fast forward or put in advance of the taxes, actually send the money they could potentially send in the future so they can avoid the tax. And after the tax is implemented, maybe there'll be a small short-term effect in some of the countries to reduce the remittances for migrants in the United States. But over the long term, even if it is stayed, I think the amount of remittances will likely be not, the decrease will likely not be as big as most people would estimate. That's my personal take on this. So I would be curious to see what my other colleagues, once they speak, if they would agree or not.
Yeah, and a second question before I let we move to the next speaker. What percentage of household income does this represent for receiving families? And could you compare that to the purchasing power of US dollars?
So it varies by country of origin, and I don't have the figures right in front of me at this time. But even if we think, for example, of $400 for a regular Guatemalan household, and the majority of Guatemalan households do receive remittances, that actually makes a significant contribution to their local and daily spending. I don't have the numbers in front of me, but again, these remittances are life-changing insofar that they actually provide access to local services, not just food, but also hospitals, income, schools. And in the more traditional development method, some of the remittances actually go to build these structures where the government is absent or unable or unwilling to invest. Like I mentioned to you, the clearest example is the Western Highlands of Guatemala, in places like Huehuetenango, which is a state in the highlands that where the government has either not invested enough to try to build this infrastructure services, or where the citizens haven't been able to, the local citizens of Guatemala haven't been able to get the government to invest in the priorities that they want to do, for example, in schools and elderly services, I should have mentioned too, for people who stay behind.
Thank you so much, Ariel. Very much appreciate your comments. Our next speaker is Helen Dempster, who will summarize recent findings by the Center for Global Development as to which countries will be hardest hit by Trump's tax on remittances. Helen will also discuss remittance percentages as a portion of a country's overall GDP, and how remittances often make up more of a country's overall income than foreign aid and foreign direct investment. Welcome, Helen.
Thank you very much, Sunita, and it's lovely to see you all. Thank you so much for joining to talk about such an important topic. I'm just going to quickly share a slide, and I'll put up a couple of figures. Don't worry if there aren't too many. Hopefully you can see that. So I just want to start by reiterating what Ariel spoke about, the importance of remittances for low and middle income countries. So as this chart shows, for decades, remittances have outstripped both official development assistance or aid and foreign direct investment. So on this chart, remittances are shown in red dashes, foreign direct investment is in orange, and aid is in black. So 2023 is the last year for which we have data, but projections show the continued importance of remittances. The World Bank estimates that remittance flows to low and middle income countries increased by 5.8% in 2024 and will increase by 2.8% in 2025 to reach a total of approximately $704 billion per year. So as Ariel mentioned, for many countries, this flow is an absolute lifeline. So if we look at remittances as a percentage of gross domestic product or GDP, we can see this relative importance. So some figures were already mentioned. I'd like to point out that in 2023, remittances made up a huge 41% of Tonga's GDP, 39% of Tajikistan's GDP, and 31% of Lebanon's GDP. If we look at Central and South America, which I know will be a focus of our discussion today, remittances make up 26% of Honduras's GDP, 20% of Guatemala's, and 24% of El Salvador's. And even when the percentage is small, the amount of money can still be large. So remittances only make up 4.5% of Mexico's GDP, but as has been mentioned, are worth 67 billion US dollars per year, and they are the second largest recipient of remittances after India at 125 billion US dollars. So as Sunita mentioned, last week, we at the Centre for Global Development published a blog which looked at the impact of the proposed 3.5% remittance tax on different countries around the world. So to do this, we used the World Bank's 2021 remittance estimates and updated them to reflect a 14.1% increase between 2021 and 2024. And we then looked at US Census Bureau data on migrant citizenship status to estimate the proportion of each country's migrants that would be affected by the tax. So that is non-US citizens, as Manuel has put in the chat. So overall, we found that if the new tax raises the sending costs of remittances by 3.5%, it could lead to a 5.6% drop in remittance sending. So unsurprisingly, we find that Mexico stands to lose the most in absolute terms, over 2.6 billion US dollars per year. This is followed by a few large middle-income countries, such as India, China, and Vietnam, and several Latin American countries, such as Guatemala, the Dominican Republic, and El Salvador. I'm just going to share one more chart. So this graph shows the estimated reduction in remittances by country as a percentage of gross national income, or GNI. So it's actually an interactive chart on the blog. So I've hovered over one of the bars so you can see what information is behind it. But as you can see, Central American countries are projected to suffer the greatest loss relative to their GNI, with El Salvador, who we know is a close ally of the Trump administration, projected to lose the equivalent of over 1% of gross national income. Where the effects of the tax are significant relative to gross national income, countries could experience lower household incomes, weaker consumer demand, and increased exchange rate pressures. For many countries, the remittance tax will be a further crushing blow after the recent cuts to US aid. In mid-May, we published a blog that made the point that with aid cuts, remittances are becoming relatively even more important. If we look at what has happened historically, we would have expected migrants in the US to increase remittance sending to support friends and family back home deal with the impact of these aid cuts. The proposed remittance tax is going to make that even more difficult, effectively dealing a double blow to the world's poorest people. So for example, Liberia is a country heavily reliant on both foreign aid and remittances. In 2023, a quarter of the country's foreign assistance came from the US, and remittances totaled more than 3 times Liberia's bilateral foreign aid. The US aid cuts were already projected to remove the equivalent of 2% of GNI, and the remittance tax will remove another 0.2%. So this is my final slide, I promise. Final chart. So using country level estimates of US aid cuts by my colleagues at the Centre for Global Development, this chart shows the cumulative losses from both the remittance tax and foreign aid cuts. So you can see that for many low and middle income countries, the impact of the remittance tax actually far outweighs the impact of no and US aid cuts conducted so far. We find that the remittances projected to be lost to the tax exceed 100% of US aid cut in 19 countries and exceed 50% in a further 4. I know we'll talk a lot about Central and South America in this call, and we definitely should, but we should also not forget the impact that this remittance tax could have on Africa in particular. So Africa stands to lose about 488 million US dollars. While this is a small fraction of the 4.65 billion US dollars that Central America stands to lose, it's arguably even more important, especially off the back of devastating aid cuts to many low-income countries in the region. So I'll be very happy to speak to any of you after this call to provide more information about that data and to pull out specific numbers for countries or regions that you're interested in. But again, many thanks for having me, and I look forward to your questions.
Helen, to the last point that you just made, Africa will lose $488 million in remittances. How much collectively were African countries getting in USAID dollars? And so what does this represent for them?
I can definitely pull out the numbers offline. I don't have them exact to hand, but I would say that, as Ariel mentioned, for a number of these countries, remittances far outstrip foreign aid. I mentioned Liberia, remittances being 3 times foreign aid, transfers. And Liberia, you would think, is a country extremely reliant on foreign aid, particularly from the US. So I would imagine that in many low-income countries, this is having a compounding effect, but I can pull out the exact numbers offline.
Yeah. And for families, what does this mean in real terms? You lose that, say, $200 or a portion of that. What does that mean in terms of their ability to survive and thrive?
Absolutely. So as Ariel mentioned, most people spend remittances on consumption goods, so food, clothing, housing, but many also spend money on further development investments. So this might be things like improving housing stock to improve resilience to climate change and further climate shocks, investing in education and skill building for children, but also further education and technical vocational education, and also further migration, enabling people to move, whether that's locally, seasonally, or across international borders for more opportunities. So these remittance cuts are going to have an impact on all of those things. And predominantly, if you're talking about a country like Liberia, the vast amount of remittance money is going to be spent on consumption. So you have a country that's already had massive aid cuts, is already facing food insecurity, the effects of climate change, lack of ability to be able to invest in education and resilience building, and now having remittances cut again is going to have that compounding effect.
Yeah, Peter Sherman asked that same question. How are remittances most often used, and what gap do they fill or need do they fill that FDI or direct aid does not?
It's also going sometimes to slightly different households. So if you think about foreign direct investment is often going into businesses or perhaps higher skilled individuals that are running businesses or engaging in the formal public sector or private sector. Aid is often going to the lowest income households, people that are absolutely reliant on foreign assistance for food, for shelter, for clothing, for education. But we know from the data that people who migrate, particularly internationally, are not the poorest people. These are people that have some disposable income to be able to spend on plane tickets or train tickets or bus tickets, to be able to pay for visas and other forms of documentation. Maybe they have to sit exams or pay for further skill building to be able to access labor markets. These are not the poorest people. These are people who are sort of low and middle income. And therefore, remittances are being sent back to slightly different communities than may be targeted by aid or by foreign direct investment. But together, they represent a totality that supports economic development across an area. I'd also note, and I am not the expert, but I know that in countries like Mexico, the regions that are getting the most foreign direct investment and the most direct investment from America and from other countries are not the same regions that are receiving the bulk of remittances. They're not the same states that are sending large numbers of migrants to the US. So again, it's rebalancing economic development across an entire country.
Thank you. One last question for you. Are there other countries imposing taxes on remittances, or has President Trump sort of set the benchmark for other countries to follow?
So I know it has been discussed in the Gulf. There was quite a highly publicized campaign in Bahrain to implement a remittance tax. As far as I know, that was never implemented. There was a lot of pushback in a number of different sectors, and therefore it was never implemented. Within the US, there is one state, Oklahoma, I believe, who does implement a remittance tax. But as far as I know, again, that is the only state that has a current tax in place. The other experts on this call might know more than that.
And here's a final question for you. Is India, for India, is it largely remittances from the United Arab Emirates that support remittances to India?
So I can pull out the data. I imagine, yes, the bulk would be coming from the Gulf, and some also obviously from the US, from Canada, from other countries in Europe, and from other countries in Southeast Asia, such as Japan and Singapore.
All right. Well, thank you so much, Helen. That was such great data. And could you please drop the link to your blog in the chat for reporters?
Of course. And as I mentioned, if anybody wants a specific figure, I can get that for them as well.
All right. We move on next to Dr. Manuel Orozco, who will discuss the challenges to implementing the tax on remittances, the impact to geopolitical relations, along with the specter of double taxation. Welcome, Dr. Orozco.
Thank you very much, and thank you for inviting me to talk to you. I think as a follow-up to the conversation, I'd like to point out at least 3 of the main challenges that this proposed amendment to the tax code in the United States poses to U.S. citizens, to national security, and to the national interest. And in that sense, has implications for geopolitical landscape. The first one, perhaps, is that the amendment explicitly establishes that the tax is to be paid by the foreign-born individuals who are authorized or in irregular status in the United States, and that U.S. citizens, which uses a strange wording, I don't know who wrote that piece, it says U.S. citizens and U.S. nationals are tax exempt, but in order to be exempt from the tax, they have to provide proof of U.S. citizenship and proof of a taxpayer. And to do that, money transfer companies, and this is the tricky part, money transfer companies can include banks, cryptocurrency companies, and other non-banking financial institutions like the remittance service provider or money transfer operator has to register before the US Treasury in order to integrate their platforms to verify citizenship and tax status. So remember, there are 2 separate things. In the United States, there is not a single private entity that is authorized to collect information about your citizenship status. There is entities authorized to confirm your legal status, but they are 2 entirely different things. So please keep that in mind, because not only the foreign-born, citizens or not, naturalized or not, send money abroad. The United States has basically 25% of US citizens contributing to philanthropy, and a lot of that philanthropy goes in the way of money transfers to other countries, to friends, to churches, to charitable activities, etc. So this legislation really is a shooting the foot in many ways against US citizens. Not only poses a hurdle, but it also opens a vulnerability in national security, because it allows basically the opportunity for hackers and other financial criminal activities, criminal organizations to break into their systems and collect information about individuals' privacy, not only on their taxpayer status, but predominantly on their citizenship status, can lead to fraud, can lead to identity fraud, or can lead to create ghost US citizens. So it's a serious problem. That's a national security problem. The second problem is financial risk.
Dr. Orozco, just to interrupt, does that mean also for US citizens, identity fraud challenges for US citizens as well as non-US citizens?
That's what I'm saying.
Yeah, yes, I just wanted to clarify that, yes.
It's explicit. If you want, everyone will pay the tax, but you can get a tax credit, tax exempt status by providing that you are, evidence that you are a US citizen. Now, there are 3 proofs your birth certificate, naturalization certificate, or your passport. No one carries that stuff around. So just imagine this, the complexities of this, the hurdle that it signifies, and how will a bank confirm a money transfer is performed by a US citizen? In any case, the financial risk is significant because, again, what the data shows is that transaction costs typically have an effect in the use of unlicensed mechanisms as well as in lowering the amount remitted. When we look at data worldwide, basically what comes across is that a 1% increase in the cost of remitting increases the informality at least by 6%. So in the United States, we have worked very hard to make transaction costs pretty low. This will return the cost about 6.5% to the early 2000 period. So, I mean, it's just a very backward situation, but the financial risk is that it will drive people into unlicensed mechanisms. And today, talking about unlicensed mechanism is a question mark because carrying money in cash is unlicensed if you do the business of intermediation. But more importantly is that it's more easily today than 30 years ago or 20 years ago tracked, and it can be quickly confiscated. The systems to prevent basically cash transfer money are easier to handle. There are other mechanisms that you could use, like dual debit cards. But again, the banks will have to track all that activity. So it poses a problem of what will signify an unlicensed mechanism, and it opens the opportunity for financial criminal organizations already existing and using financial payment platforms for illicit activities to offer their services to remitters. Reducing the cost, the amount transfer, the data shows that for every 1% increase in the cost, you reduce your amount by $30. So in this case, it will be over $100 reduced in your average. And currently, for the US Latin America corridor, the average is $400, $410. It varies. Mexico sends $500, Guatemala sends a lot of money, or close to $600. But the bottom line is that you will have different effects. And this brings the third issue, which is it deals with the national interest. And that is that remittances have an effect in increasing disposable income. When you were asking what percent of remittances make up a household's income on the receiving side, it varies, but it ranges from 40% to 70% of total household income. So your average can be around 60%, but the significance of that is that there is a dependence on the flow of money that goes into these communities. But when you reduce the amount receiving, you're also reducing the income of the income dependence on remittances and depressing economic activity on the receiving side. In a country like Guatemala, for example, or even in a country like El Salvador, private consumption is practically 30% supported by remittances. And when it comes to the increase in disposable income, it also allows you to increase your savings. And increases in savings has a negative correlation to the intention to migrate. So if remittances drop, your intention to migrate might increase. And this is a critical issue for two reasons. One is that remittances, migration was already slowing down. It's been slowing down since 2023. And number two, and because the intention to migrate has slowed down for different reasons, not necessarily because of immigration policy. And the second reason is that if you reduce the flow of money, the intention to migrate will occur exactly at the same time when you try to stop migration from occurring. So you're shooting yourself in the foot. And what's a problem too is that not only reduces the intention to migrate, it also has an effect on the import of U.S. goods. I mean, the first time I did these studies on remittances was in 1995, where we showed a correlation between U.S. exports and remittances outbounds to a given country. So you exported to, you remitted to Mexico, and there was a positive correlation with the exports of U.S. goods to Mexico. The same thing applies for all of the CAFTA countries, Central America, the Dominican Republic in particular. So you will reduce consumption of U.S. goods when remittances decline. My projection is that looking at the most conservative estimate, it would point basically to a decline, a reduction of 7% in the amount remitted to many of these countries, ranging, from 5 to 8%, depending on how dependent on the U.S. the remittances are. But the most significant aspect is that a 3% increase in remittances increases GDP by 1%. So if remittances drop by 6% for countries like those of Central America and Haiti, this is very important, Haiti, you're going to have a significantly negative growth. And remember, Haiti is facing a triple whammy. The closing of borders, the number of entries of Haitians to the United States has zeroed, basically. The deportation, but also the ending of humanitarian parole and temporary protected status to 500,000 Haitians at a time when there is a high level of violence, where there are already deportations of 400,000 Haitians from the Dominican Republic. So it's, to some extent, is somewhat, let's say, morally indefensible, but it's also politically indefensible and economically indefensible to argue for this type of taxation, given all of these complexities, but empirical realities that point that the tax goes beyond the simple arithmetic calculation of what a 3.5% will do to the total volume of money.
Yeah, and just to clarify on that point, the Constitution does not directly protect double taxation, although some legal experts argue that it is in violation of the Commerce Clause. What legal protections could immigrants call upon to protect them from this double or even triple tax?
Well, I don't know the legal scholarship of this, but I mean, the point of the part of it, this is not about tax status. Remember, the link that is being made is about your citizenship status.
Right.
Now, one of the solutions one can provide is to argue that the tax, if you don't want to get rid of this, you can at least charge it only to those who are non-income taxpayers. And that doesn't necessarily apply to those on irregular status. It's applied to a portion of it, because many of them, in my experience, migrants, the first thing they do on January 2nd is to start filing their taxes.
Right. And you, when we pre-briefed, you had spoken about workarounds that immigrants can use to keep their identities protected, such as having two bank accounts, one in the home country and one in the US. Could you expand on that a little bit?
No, what I was saying is that an immigrant may send a debit card to the relative so that they can use it in their home country to withdraw cash with that debit card from the personal account of the immigrant. You know, something like when we travel around and we need to cash dollars, we go to an ATM and we cash it. In this case, I will not be doing it physically, but my relative will be cashing money. I mean, that's a mess, because I don't want my relative to have access to my bank account. But it's a way, it could be a way to circumvent the tax. However, with existing anti-fraud mechanisms, you can quickly detect that this is a way to evade tax. So it wouldn't fly in the long term.
Okay. Well, Dr. Orozco, thank you so much for your comments today. Please stick around for the final round of questions. Our final speaker today is Ana Valdez, who will discuss Latino American pushback to the remittance tax using the newly found political muscle developed during the last election cycle. She will also release new polling data. Welcome, Ana.
Thank you so much for having me. It's really an honor. I've learned so much from my colleagues. They're experts, by the way. I'm happy to be here to learn from them and humbled to talk about what we've been doing lately, but definitely not at the level that our three colleagues here have done. But confirming everything that they actually have found. To start with, we are calling it a double taxing, initiative, just because, and you're right, everything that has been said here is correct, but these people are sending money that has been taxed, as you well said, not 2 times, but sometimes 3 times. So this is, in our opinion, it's a penalty on the American dream, because immigrants are the American dream. And this is a penalty on something that is an institution in this country. So, remembering always that, immigrants are the economic engine, and these are families that are crossing the border. So it's a profoundly bad idea. But more importantly, I think, well, and the irony is that taxing the remittances won't stop the money from leaving, right? It only takes a bigger cut away, unfortunately, from the poorest people in the United States. Of course, all the arguments that my colleagues have done about the countries that are recipient and how they will suffer, and that's absolutely important. I think that most of the people that are voting on this bill are not very concerned about the well-being of these foreign countries. I don't think they have their well-being at heart. So I'm going to talk a little bit about the impact in the United States. To start with, we have informally been polling all through the 3-4 weeks that this subject has been taking our attention, and we find 3 things. One is that people that are sending remittances are not going to stop. We hear comments like, "My mom is going to get her $1,000 every month, whatever it takes." And unfortunately, probably what it will take from the families is to stop spending in the United States. People have said, if I have to stop going to the movie theater, if I have to stop buying clothes, if I have to reduce my expenses in terms of other, luxury, if you may, outings or hobbies, it will. And that's slow in the economy. Remember that immigrants have, I'm going to give a data about what we're specialized in, which is the Latino community, right? The Latino community has a purchasing power of almost $4 trillion. So when you're, punishing these communities, it will have an impact. So that's one. The other thing that we hear a lot every time we poll people, and as I said, we've been polling for 3-4 weeks, is that they will be asking for employers to help compensate. That again is, a strain in the economy, right? People like nannies and people like gardeners and, people that actually have the luxury to talk to their employers directly and say, "Hey, you like my work? I need you to help me because I need to send money, to my family." And then the third one that we hear a lot is that they will find other ways to send money. And as my colleagues mentioned in several ways, that brings insecurity not only for them, that are going, taking other routes of sending the money, but also for Americans in general. And so, people are talking, and I think it's extremely important, on the impact of this tax on the countries that are recipients, but we're not thinking about what it's doing to our country. I'm going to give you another example. So we work with banks a lot. Banks are partners in a lot of different ways, research, sponsorship, etc. And what officially Bank of America and Wells Fargo have been mentioning in the last 2 weeks is that they've seen withdrawals from immigrants that have increased in an important way, right? They've mentioned in the level of 10,000 and plus. And this is conversations that are being having that are actually information that is circulating in the banks about what is going on. And so what they found were 3 main reasons. One is, of course, fear of being deported and having their money frozen there, right? Nobody being able to take it out. And that doesn't have to do with the tax itself right now, but I'll tell you a little bit more. Another reason why they are withdrawing larger amounts than before is that they've been thinking about traveling to Mexico and then bring those, and of course it's easier for Mexicans to do that, right? I'm not talking about India or other countries that are, it takes a much bigger toll in time and in money. But in the case of Mexico, traveling to Mexico, bringing money in advance of the next 10 months, right? I'm going to bring, if I'm giving my mom 10,000, I mean, if I'm giving my mom 1,000 a month, I will bring 10,000 right now and expect not to have to do any transactions in the next 10 months, hoping that things will settle down and finding ways to do it in a less expensive way. And then the other part is also that people are thinking that, most immigrants, and especially the undocumented, are at risk, right? So how is this all affecting together with the taxes? Banks, well, they're seeing irregular behavior, and that affects them, right? They are taking measures. They're wanting to hear more from the people, from their clients. And remember that for banks, and that's one of the reasons why we work very much with banks, for them, the immigrants are an extremely important cohort, a cohort of opportunity, because it's new financial clients. Most of this, the children of immigrants are new to the banking system. So all this affects the functioning and the trust of banks as it is. Last but not least, we've also learned that companies like Nu, Western Union, and Wise have elevated their verification requirements, right, in general. And that's one of the reasons why we've seen, for example, the Mexican remittances this month going down on 12%. That's really bad for American companies that are in this industry. If you mentioned, all of you guys mentioned that Mexico is the second country that receives the most recipients, and they got a 12% reduction this month. Imagine worldwide, and imagine how that affects this American companies that are suffering, rumors. The tax hasn't even been implemented, and these are all just rumors, and they've already affected at that level. So again, I hope this helps. It's about the effect, because people are not talking about the economic effect that we will suffer in this country because of this. And as also Dr. Orozco mentioned, for a number of tax collection that is not going to, compensate for all this different, effects and impacts that this will have.
Anna, thank you so much. Peter Sherman has a question for you. Could you please ask your question, Peter? Or actually, he's making a point. Anna, you get the headline prize, Tax on Remittances, a Penalty on the American Dream. That is fantastic.
I love that.
Yes.
Please use it. Please use it a lot.
Exactly. He had also asked, some GOP lawmakers along the southern border has spoken out against the tax. What sort of political hit could this present for these officials? What are the political risks for Republicans potentially losing the immigrant vote over this tax?
You know what? This is a really good point, because we saw, fortunately or unfortunately, depending on what you were hoping for, we saw an effect on the lack of action on the immigration issue during the presidential elections last year. And we're actually immigrants, kids and immigrants, the parents, even the first generation, are voting every day, every time, more and more and more, and they're more informed. This has gotten a lot of attention. And in the Latino community specifically, we see the communities that have that moved a little bit towards the Republican Party, like the Cuban community, the Venezuelan community, the Puerto Rican community, actually in social media complaining constantly, right? Saying, hey, I voted for a better economy, I voted for a better life for my family, and they're already very unhappy. So we don't have numbers yet, but my estimation is that it will reflect on the voting, on the next voting that we all will face next year.
Yeah, and to follow up on Peter's question, many members of the House have said that they signed off on this big, beautiful budget bill, but we were unaware of what was actually in it. Do you believe that members of Congress are largely unaware of this remittance tax, and what is LDC doing to make them aware of the impact of this tax?
I think it is a terrible truth, because it is true, and it is, and this is my comment overall in the political field. I think there are many lines that we're not reading in that, I think, 90-page bill, right? So, and this may be one of them. And so to what we're doing, we're actually using social media to create awareness of it. We are a nonprofit think tank, so we cannot advocate for yes or no, but we're creating awareness of what is happening with this specific part of the bill and others. And then also encouraging people to call their senators, and make sure to express what their preferences, right? Because yes, we're busy, we're not in Washington, D.C., we're not in politics, and people miss these opportunities to actually make a change. And so we're encouraging to use their voices and making them aware of how will all this impact their lives, everyday lives.
Thank you so much, Anna. We now ask each speaker for their 30-second soundbite, their most important takeaway from our discussion. Ariel, why don't we start with you?
Thank you. I think for me, it has to be that the remittances have been a lifeline for migrants and sending communities for decades. And any disruptions to remittances in the future, whether they're short-term or long-term, will actually have a disparate impact, not only on the migrants and their families in their country of origin, but also on their communities and cities that will be able to spend less or invest less in the local conditions, and therefore may spur in the future irregular migration from those countries. In the end, this could actually have unintended consequence to actually spur irregular migration to the United States that so far has seen a relatively quiet border, but could see an increase in the future, especially from countries like Mexico that are close by and could be the most directly affected by this remittance increase in the tax.
Thank you, Ariel. Helen.
Thank you very much, Anita, and to everyone for their presentations. I think coming on the back of the question to Anna, the fact that very few people are speaking about this remittance tax is really concerning. And in my world, there was so much discussion around aid cuts and the impact that that was going to have on the world's poorest people, but very little discussion about the fact that this remittance tax will also have an impact on the world's poorest people, and in many countries, an even bigger impact that aid cuts have had. So my main takeaway is just to really recognize that for many low middle income countries who rely on both aid and remittances, these two cuts are coming from the administration is going to deal a double blow to the world's poorest people.
Thank you, Helen. Dr. Orozco.
Thank you. Mine is, given the fact that we're talking about media outlets here, is please educate legislators. In my experience, during the legislative process at the House, more than half of the legislators, Republican and Democrat, had not read the tax amendment. And now it's happening with the senators. They haven't read, they did not know. We met with several people and they weren't aware. So first, try to educate through your outlets. They're just basic stuff. Read the amendment. read it carefully.
Yeah.
And even ask yourself, what does it mean to establish the difference between US citizen and US national? And second, evoke the political will of people to understand the consequences in national security and the national interest on these issues. And, we can share evidence, data, you name it, that basically points without making this a political matter.
Thank you so much, Dr. Orozco. Anna, you have the final word today.
Thank you. Going back to the the reality is that the proposed 3.5 tax isn't policy. I mean, it's double and tripling taxing. It's penalty on the American dream, as I said before, and the economic engine, right, of these millions of immigrants. They're not just senders of immigrants; they are buyers and builders and economic contributors in this country. They're part of. We've proven over and over and over again that without immigrants, this country wouldn't be the leader of the world. We're punishing, this tax is punishing the same population that is holding up the U.S. workforce growth. Home ownership, small business formation, future markets. According to Department of Labor, U.S. Department of Labor, 78% of all the new workforce in the next 10 years will be coming from the Latino community, which is an important part. It's not all of the immigrants, but it's an important part of the immigrants. And, it creates, fear, it discourages legal and financial engagement, it hurts banks, it hurts companies, and it hurts the economy in general. So, remember always that, remittances in the end circulate back because, the relationship that these immigrants have with their families it goes back and forth. And so the well-being of their families there influence the workers that we have here too. And so, whatever they are doing will affect every American.
Thank you so much, Anna. To our speakers and reporters, thank you so much for joining us today. Reporters, we hope to see you next Friday when we discuss cryptocurrency, a new investment model for many immigrant communities, but with a lot of pitfalls. So see you next Friday. Thank you again.